So I would do a quick intro because honestly, I don't know anything about you. So here's how this worked, team. My boy Tony was like, "Hey, man, you should interview my really good friend Kent Savage." And I was like, "Done." So I reached out to Kent. And I was like, "Let's do an interview," and that's where we are. So pretty much, if Tony says to do something, I just go where and how, and that's the way this worked out. So Kent, my man, tell us a little bit about who you are, what you do, what your specialty in life is.
Sure, sure. And Nitro, thank you. I try to live up to my last name.
Kent Savage, yes, it's a great name.
So thank you. Um, so I am what I like to call an investment attorney. So what that really means, because everybody probably, I mean, attorneys call themselves so many different things. But what that means to me is I am a tax attorney mixed with a protection attorney. So what I do is I help people save a bunch of money on their taxes, and then I help and get structured in the right way so that they're saving money on their taxes. So it's not just, hey, let's do your tax return in the most efficient way, but it's, hey, let's actually set you up so that you, and Thomas Wong, yes, we have spoken before. How are you doing? It's so that we can actually set you up so that you can have the right tax structure now and also going forward in the future. And then after that, we try to protect it so that nobody can ever take it away. Not only the IRS, but anybody in a lawsuit or anything like that.
Love it. Yep. I remember Tony saying that you were kind of like a tax specialist. I've gotten a lot of questions about taxes recently. And so, if people have questions in general, feel free to reach out to Ken. But in regards to this career path, how'd you get started in it?
Well, that's actually a really interesting question and story, and I'll try to keep it kind of simple. I always wanted to be an international attorney. So I always wanted to do work internationally and help businesses that were functioning internationally come have access to different markets, because I'm a big believer in rising markets kind of lift everybody. So I wanted to do that and spent a couple of years living in Russia, and I thought, you know what, I want to be kind of connected with people globally. So right when I got out of law school, I started working with a group that some of you might have heard of, maybe not. They're called the Nessman Group. And they basically are an international investment firm. And they talk to people about how to protect themselves and do different things while using Sergey, привет. So we would help people, you hear about things like Swiss bank accounts and stuff like that. So I helped people do that kind of thing. And you hear about those fancy foreign trusts and people who have money offshore, and you hear that Trump has money offshore, that the Bushes have money offshore. So I was at first an attorney who did that kind of thing.
You're the offshore guy. It's awesome.
Now, the more that I did it, and I was lucky to land with a group that was really, it was super honest, super upright, was big believers in reporting everything correctly. But a lot of people tried to go offshore for tax purposes, right? So people would want to go out, they'd say, hey, how do we save a bunch of money by going offshore? It turned out that I couldn't help people as much as I thought I could when it came to offshore stuff. Turns out that that's kind of convoluted, because you can do a lot of really cool things offshore that are totally legal and totally good, especially when someone's making a lot of money. But the average person who's trading or doing something like that, a lot of times you can do a ton of stuff onshore, and I didn't know that yet. So I was offshore. I started working with another group, had some mentors that really helped me see kind of how things work onshore. But what it did was it kind of took my offshore thinking, and I've been able to apply a lot of those strategies and the trust strategies and the LLC strategies and the other things like that you usually see offshore. I was able to apply them here in the US and create structures that help people save a bunch of money. So that's kind of, long story short, that's kind of how I ended up doing what I do.
Very cool, man. So let's dive into the weeds a little bit. Do you handle crypto at all?
Yes, I do handle crypto. Um, I basically handle any type of, we can talk about the structuring of any type of investment,
Uh-huh.
right? So, um, I mean, a lot of people, I've found that a lot of people who trade are also people who are always looking at different types of investments. So they might be in crypto, they might, they can be doing Forex, they can be doing anything like that, but then they could also be jumping into something like, um, they could be doing real estate, they could be running their own business, right? And all those types of things. And I find that that happens a lot.
Yeah.
So I try to have a practice where I can help somebody with kind of all of those structures.
Got it. Love it. When should a trader create an LLC or any other type of structure for their trading?
It's a that so I'm going to give you the different thinking on that because there's
Okay.
different ideas out there.
Sure.
I'm a huge fan of creating an LLC almost right away. And the reason why is because LLCs are incredibly flexible entities. So some of you guys out there might have heard of LLCs, and you might have heard of corporations, and you might have heard of S corporations and really cool things that happen with tax. LLCs can be any of those. And LLCs also, just at the beginning, will also provide you a little bit of protection. And it depends on the state and other things like that. But when someone starts making money, I generally say, hey, let's set you up in an LLC, because right now you'll be able to take the tax benefits of having a business. And then as you grow, we will be able to take elections that will continue to help save more money. So for example, a lot of people, they'll start an LLC. And when you start an LLC, you can claim trader's tax status. I don't know if anybody out there is familiar with that. But when you start an LLC, you basically get a say to the government, hey, I'm a business now. And
Yeah.
there's some different things that go with that. People talk about that a lot and say, well, you have to meet this requirement and that requirement. That's true. But most people who are trading, they probably trade enough to meet the requirement. And also, it's not something that's granted to you. It's something that you take. So you just say, hey, I am a business. And if the IRS has a problem with it, then they come to you.
I,
So you start it, you get going, you start treating yourself as a business right away, and then you start saving yourself a ton of money. And then farther down the road, we say, hey, you're making enough money that let's make a few tax elections with your business. Let's change you to an S corp. Let's do some other stuff, but we can still do it through that LLC.
Now, if you already currently have an LLC that's not specifically elected as a trading company, can you add it or change it or adjust it, or should that be pretty easy?
Absolutely, absolutely. Um, Again, this is just something where you're the one who's just telling the IRS, look, I'm a trading company now. And LLCs have the ability to be super, super flexible, which is so awesome, right? So you can, if you have an LLC from any other, whether it's for real estate or whether it's just someone said, hey, you really need an LLC, so you set one up, but you never used it, or
Yeah.
whatever it is, we can absolutely use it for your trading.
Gotcha. So a lot of great questions coming in. So really quick, just in case if you guys are already fired up and you're like, yep, I know I want to work with Kent, or I want to get some more information, do some consultation. Is there any way that people can reach out to you, Kent, directly?
Sure. The most easy way to get a hold of me is to honestly just jump on my calendar, because I do free consultations for anyone who wants to talk to me. And,
Okay.
I'm a big believer in giving people information.
Okay.
So, best way to get a hold of me is the link, Calendly dot, let me pull it up, make sure I have the right one.
Yeah.
It's calendly.com/savage law.
Of course. I love it. All right. So I'll throw that in the chat, man. But yeah, if anybody wants to just schedule a quick consultation, why not? Just I figured I'd throw that out there because I know a lot of people are going to have questions that I'm not going to be able to either ask or also know the answer to, or be able to get in our next 45 minutes of our discussion. But there's the link. It's also there, and Calendly also, great, easy service. Okay, cool. So going back to some people questions initially, Lauren says, do you do anything with after taxes are already owed?
So yes and no. There's a few things we can do. And again, I'm going to kind of lean back on that LLC. LLCs do a lot of things for us that allow us to plan now and in the future. So one of the things that will happen is people will call me. December is always a really busy month for me, right? Because everybody calls me right after Christmas and they say, wow, Christmas was great. It was fantastic. I've got 4 days till the end of the year. What do I do?
Yeah.
So, because I'm gonna have to pay a bunch of taxes, or they'll get to the end of the year and they'll say, I have a huge tax bill. What do I do? Um, Honestly, that timing is really important. There's a lot of things that we can do if we talk by the end of the year. So sometimes we can, and again, it just depends on the situation. Sometimes we can set up an LLC and we can apply some of the income that you've made to the LLC. Sometimes we can't. It just depends on your situation. Sometimes we can, and some of you have probably heard about this, you can do things like set up a 401k. As long as you set up a 401k, and you can do this for your LLC, your trading LLC, you can set up a 401k and make contributions to that 401k before the tax deadline for that year. So let's say it's January 5th and you're like, you know what, I never addressed my taxes and I do want some deduction. You can call me. We can set you up with a 401k, and as long as we put money in there before you actually pay taxes for the past year, so April 15th basically, then we can actually take that as a deduction for the year before. So there's stuff like that. And there's also some really cool charitable trust stuff that you can do if you do it before the end of the year that we can save you a ton of money as well.
Yeah, the charitable trust thing is fun. Those are so legal and so great.
They really are. And again, I know, just as a really quick, just plug for those people that might be interested in them. Just a small little example, and then we can move off of it. But I mean, you can literally set up a trust where you put money, you get a tax deduction up front for putting the money in the trust. You give charitable donations out of that trust while still controlling the trust. You could still be trading out of the trust as long as you're giving charitable donations. And if you make more from that trust through the trading than how we set you up, which really, it's a really low interest rate that you're paying out charitable deductions on. If you make more than that at the end of the term, which can be a certain amount of years, anywhere between like 5 and 30 years, you get to take all the money that's left over tax-free at the end of that. So there's some really cool things that way.
Yeah, that's really cool. Carrie has a pretty easy question. Do you have experience helping traders start hedge funds?
So I do. I do. Call me and talk to me. That's a very specific thing.
Yep.
And I've worked with people who've done it. Call me and we can talk about it.
Yep. Perfect. Justin says, if you just started day trading this year on a personal account, would you stop and create an LLC first?
So I'm going to say yes. In order to take deductions, and the cool thing about having a business, let me preface this. The difference between trading on your own and trading out of a business is when you're trading on your own, all the gains that you have, you pay taxes on. When you're trading in a business, in theory, you pay taxes on the gains, but you can also use business deductions to offset any gains you have before you pay taxes.
Yep.
Okay. So in order to take advantage of those deductions, or most of those deductions, you should be in an LLC. And so I tell people generally, I mean, the trades have to come in through the LLC. You have to be making money in the LLC. So I generally tell people, yeah, it's worth it, especially if you're only halfway through the year. Let's throw you into an LLC. Let's do it real quick. And especially even if you're trading different instruments, we can have some of it going through the LLC, some of it not. But as long as we've got some money coming into the LLC, we can start taking deductions.
Got it. Got it. Mike has a question. He says, can you have a day job and still be an LLC trader? So by day job, Mike, you probably mean like W-2. And I'm going to assume the answer is yes, but I'll find out from Kent.
The answer is absolutely yes. You totally can. And on top of that, depending on how much you're making as a trader, obviously everybody's trading to make money. But there's some really cool deductions where, you know, if you're making, I really shouldn't say numbers, you know, because it's so different for every single person, but you can be making a decent amount of money on the side and we can be writing most of that off. So, you know, again, talk to me if you actually want to get into numbers and see if it works for you, but absolutely you can be working and you can be trading. And, you know, especially depending on how much you're making trading, if you're not making enough that you're ready to stop and make it your full-time thing. A lot of times we can write off enough that we have losses that you're applying to your normal day job, which is really cool.
That is so sick. Yeah. And that's the cool part about it is like, I tell people all the time, like, why not, you know, go that route so that you can figure out a way to do that.
Yeah, absolutely. Yeah. Absolutely.
Okay. Lade says, can you be a trading company and other business combined on the same tax form, single member LLC in California currently?
So the answer is yes. And there's a lot of people that will tell you no. And it is, I should say it's a little bit more nuanced than just saying yes, but yes. if you're doing other business, we can have the flow of the trading income come through it, and that can be really awesome. Sometimes if you have another business that's a little more risky, like for example, there are doctors. I've worked with a lot of doctors who also trade. I'm probably going to say, let's not bring trading income through your medical practice or pay 1099. There's things like that, but we can actually still bring it through as long as there's something called entity stacking, which I do, which is something where we have an LLC, which is fully owned by another LLC. And what it does is it makes it so that we can flow all the income onto one tax return while still having separation and some protection. So it depends on the business, but, and you have to set it up right. But yeah, as long as but generally the answer is yes, you can put it through one event, one business.
Well, this is a fun one. So Terry says, what do you think about setting up offshore rentals in, say, the Cayman Islands and hold your rental income in an LLC offshore account and purchasing additional properties?
So I'm actually a huge fan of that. Call me and talk to me about it because I actually, like I said, I have a lot of experience in the offshore world. There's a lot of misconception about taxes in the offshore world. So as long as you're reporting it correctly, we need to take the right, you live in the Cayman. So Terry lives in the Cayman. So if that's the case, Terry, absolutely 100%, let's do it. And again, we can talk about it. Yeah, so I think it's a great strategy. So
very cool.
Especially if you live offshore. But yeah.
AJ says, are taxes based off only closed positions?
So that is a good question. The answer is it depends, which is such a lawyer answer to give somebody.
So it's the right answer though.
Yeah, it does depend. There's different, so I don't know if you guys have heard of, there's different elections that you can sometimes make depending on what you trade. Like for example, mark to market, or depending on the different instruments that you trade, they're all treated differently from a tax perspective. So at the end of the year, you have to pay based on what positions you have versus the positions you've closed, depending on what you're trading and what elections you've made. So again, that it gets a little convoluted, but call and talk to me, and if in a 30-minute consult, we can definitely cover something like that for you.
Yeah, very cool. Let's see. So Stephen, we're talking, we don't specifically want to talk numbers as far as how much money you need to be making to create an LLC, but in general, I mean, if you go to like what's that one website where you can just do all the work? LegalZoom. I mean, you can create your own LLC for hundreds of dollars, but generally, if you do get someone, a professional, to reach out and have them all construct it for you, it just gives you a little bit more of a peace of mind, in my opinion.
And if you come and talk to me, like I told you, I'm big about information. So if someone calls and talks to me, we'll talk to you, because again, it depends on your state. It depends on where you are, how much it costs to set up an LLC, and whether that makes sense to set it up with where you are with your trading. I am not I'm not a hard sell guy. I won't push you into anything. I'll tell you the information. And there's plenty of people where I've told them in the past, set this up, go to LegalZoom, and come back to me later, right? When you're making X amount of money through your trading. Again, I want people to have the good information, because then when we do work with each other in the future, you're set up to actually benefit from everything correctly.
Yeah, exactly. And that's the key, is like, you can, even if you're not profitably trading, you could still have an LLC. And if you have any other stream of income, you can still create the LLC to have additional write-offs to make sure you don't pay any taxes or potentially get taxed back.
Absolutely.
Yeah.
And again, that income can come from so many different things, right? And I know a lot of people are trying to set up different income streams, but it's really cool that way.
Yeah, exactly. Lottie says, are you in California? Yeah. Where do you live, Kent?
So I actually live in Utah, and somebody asked, I saw it pop up. Somebody said, are you an attorney or an accountant? So I'm an attorney, and I live in Utah, and I'm licensed in Utah. I went to law school in Arizona, but because I'm a tax attorney, I deal a lot with the federal side of things and setting up businesses. I am allowed to do that in every state. So when somebody comes to me and we can talk about what you've got going on in your individual state, I can't represent you in court in every state, but I can talk to people in any state. That's not an issue.
Yeah, which is fair.
And shout out to Alex in the PG, said he's in Pleasant Grove.
Yeah, so we got. So have you met Tony in person, or just?
Oh yeah, so Tony and I go way back, from before Tony ever traded and before I was ever a lawyer. So
cool.
He's a good guy. Really like Tony.
That's great to have good friends like that, man. That's
Absolutely.
That's all it took. Tony was like, "Hey man, you should interview my buddy Kent about taxes and stuff for traders." I was like, "Yeah, done." Because honestly, I get a large amount of questions about taxes, and there's not a lot of information out there about that, just trading and how to do it and why to do it. I mean, you could do some easy Google searches, and yes, there is some information out there, but it's not as prevalent as you would imagine.
Sure. Well, and one of the things that I've found is that, like you said, it's hard to find information. And then a lot of times the information's not complete, or the information's fragmented in a way that makes it hard to digest. So for example, a lot of traders will hear about mark to market. Well, what does mark to market actually mean? And does it apply to you and what you're trading? And again, that's a huge, it depends. And so people will read about that, and they'll be able to see, oh, if I take mark to market, and again, not to get too in the weeds here, and I'll jump off this in a second, but if I take mark to market, I don't have to deal with wash sales, for example. And that sounds really great, but there are other consequences to taking mark to market that we should probably discuss and just make sure that it really does make sense to do it. Because sometimes people miss those other consequences. So that's just one example.
We can get into the weeds, man. What will be some of those examples?
Sure. So mark to market, what mark to market does, and I'll tell you the two things that it does. And I'll give you the lawyer accountant speech, and then I'll try to make it more simple by giving you some real examples. Okay.
Sure.
So the first thing mark to market does is it gets rid of wash sales for certain types of traders. Okay. So you get rid of wash sales by taking mark to market. So people who have dealt with wash sales, that sounds awesome. But the other thing that mark to market does that people don't realize is it changes, and this is, again, I'll explain what this means. It changes your capital income over into ordinary income. Okay. So in an actual example of how that affects somebody or what that actually means, when you're doing your taxes, there's a couple different lines. Well, there's tons of lines, but there's a couple important lines. One of them is your ordinary income line, which is the money that you make from a day job. For example, somebody who's got a W-2 or they're working any other type of job. The money that comes in, that's ordinary income. Okay, it's not capital income. Capital income, which a lot of you guys already know this is money that you make from assets that you own. So this could be trading, right? So the money that you make from trading is generally considered to be capital income, or from real estate investments or other things like that. Okay. So let's say that and I'm just going to make up numbers for fun. Let's say you make $10,000 a year at your W-2 job. Okay. So you W-2 make 10 grand a year. Let's say you trade and you make 10 grand a year. Well, on your tax return, the W-2, you're going to write down $10,000 on the ordinary income line. And then on the capital income line, you're going to write down $10,000. Now, what people don't realize is that the IRS, those are two different lines, and they say, hey, we want you to keep these things separate because we're going to tax you off of two different tax brackets. Well, short-term capital income, which is what most traders get from trading, short-term capital income is actually taxed, even though it's a different bracket, it's actually taxed the exact same as W-2 income. It's taxed at that same marginal tax rate. So you're still paying the same amount. So if you pay $10,000 on your W-2 and then you make $10,000 trading, you're still basically paying tax on it's the same thing as if you had made $20,000 W-2 or $20,000 trading. Okay. What mark to market does is it changes that so that we combine the lines. So you say, hey, I made $10,000 trading. We actually, instead of writing that on the capital income line, we write that on the ordinary income line. The only reason why that becomes significant is if you have losses. So let's say you make $10,000 on your W-2, but then you lose $10,000 trading for the year. Well, in a normal scenario, the IRS comes to you and they say, hey, bro, you made $10,000 from your W-2, congratulations, now pay us tax. And then they go down to the capital side and they'll say, oh, you lost $10,000, that sucks. Well, we're so nice, we'll let you carry that over into next year so that when you make money next year, you won't have to pay taxes on the money that you make in the capital bracket. But if you take mark to market, we just combine it. So instead of writing 10,000 on one line and negative 10,000 on the other line, we just go to one line and we write 0, and you don't have to pay any taxes.
Yep. Makes sense. And great explanation too, man.
Well, thanks. Well, and like I said, it's kind of in the weeds. And just, I've seen a few questions come in. Just Chad was asking, does that add self-employment tax? That's a really good question, Chad. The answer is no, it does not. And some of you guys might actually know this, but traders do not pay self-employment tax, which is awesome. And that doesn't change even if we change your income from capital to ordinary, which is really cool because, again, people who are working a W-2 job, they have to pay the employment tax. And people who own their own business have to pay employment tax, but double whammy because they have to pay the full employment tax, whereas most people's jobs pay for half of it.
Yeah.
So great question, Chad.
And you can create an LLC, ladies and gentlemen, and pay yourself as a W-2 if you want. I mean,
you totally can. And that's actually the way to go for most type of businesses and investments. It's not always the way to go for trading. So it just depends, because trading doesn't have, when you pay yourself a W-2, you actually do have to pay your self-employment tax on that W-2. But some people don't realize we can still use really advantageous business structures like an S Corp. For those of you who know anything about different tax structures, we can actually put you in an S Corp and you don't have to give yourself a W-2 for trading. S Corps are generally set up to lower self-employment tax, but they're also really amazing companies because they never get audited. That's the rule of thumb. I shouldn't say never. The
Yeah, I
rule
was
of
about to say, wait a minute.
yeah,
But that's cool though. That's really exciting.
it is. And really, honestly, like if you make less than $10 million a year inside of an S corp, the chances of you getting audited are really low. Which all that means is those deductions that we always take legal deductions. We always do.
Yeah.
We're always following the rules, but we can be pretty aggressive. Okay, and we can talk about what's going on and make sure that we're taking the maximum amount of deductions.
Yep.
So,
love it. So speaking of the S corp, and then I'll get to James' question because he asked all panelists, so you won't be able to see it. But Terry says, I have an S corp for my consulting business. Do I need to create an LLC, or can I just use the S corp for trading?
You can use the S corp for trading as well. And in fact, I really like that. You need to make sure that your accounts are set up in the name of that S corp. Depending on what your consulting business is, sometimes I'll tell you, and how much you're making. Sometimes I'll say, let's flow some of the money through the S corp, and we'll flow some of it through another LLC. It just depends. But yes, the idea of using trading is not a very risky business in the sense of you interacting with other people, creating harm for them personally.
Agreed. Yeah.
So because of that, you can oftentimes add trading to other non-risky businesses and add those income streams together. So if your consulting business is that type of thing, where you're talking to people from a distance, you do it online. Again, it just depends. Then I'll say, yeah, for sure, go ahead and do it. And again, it also depends on how much money you're making. And that's going to be a tax bracket question on how much money you make. Are you married? What deductions are you already taking? Do you have kids? All of that kind of thing, which again, we can do that analysis pretty quickly, but just give me a call and we can talk about it.
Cool. James says, what if you already have a huge capital loss carryover?
So that's a great question, James. In terms of mark to market, don't take mark to market. So if you already have a huge capital loss carryover, if you take mark to market, then your losses going forward or your gains going forward are going to be ordinary gains and not capital gains. So they're not going to offset your losses. So for someone like we would talk and I would say, don't take mark to market. Let's just put you in a company. Let's start taking, let's make back all of your losses. And once you make back your losses, then let's look at taking the mark to market election. That's a really good question.
Yeah, really good question. Man, we are flying.
People are really getting deep on those. those are pretty intense questions. So yeah, good questions.
Yeah. Well, the thing is, like, it's very, like I said, it's just so many things that are just totally out in the dark with a lot of this in regards to just getting the information.
Yeah.
So, Mr. Patel says, is there a max number of years you can carry over your loss?
So again, the answer is it depends. It depends on the business. It depends on the type of loss. So, it can be a capital loss. It depends on what the capital loss comes from. So again, call me and talk to me. The general answer is not really. You can carry it for long enough that it can make a significant difference on money that you make for many years. But it's a little more nuanced than that. So again, a lot of these answers are super nuanced, but it depends.
Yeah, totally. Again, if anyone else has any other questions, let us know. But one other one that I have, is there a benefit or unbenefit's not the right word, but is there pros and cons to creating your LLC in a different state versus the one that you live in? Like,
great question.
Good old Delaware.
Yeah, that's a really good question. So in general, the rule of thumb is that you should always create an LLC or set up your business in the state that you live in. Okay. There are reasons to not do that, but usually the state that you live in, they get really jealous. Okay. So, and there's a lot of people out there. This is another thing there's a lot of misunderstanding. So a lot of people will say, hey, set up your company in Nevada, set it up in New Mexico, set it up in Wyoming, set it up in Delaware. There are reasons to do that. Generally, they're not what people say. You're not going to save taxes doing that. Okay, so number one, you won't save taxes. If you're living, if you live in California, California is a crappy place when it comes to taxes. It's just how it is. If you set up a company in Wyoming or Delaware, California is super jealous and they're more aggressive. I would say they're way more aggressive than the IRS. They come after people that have businesses outside of their state when they live in the state. So now there are other things we can do. For example, we could set you up with a trust or a trust that owns the company in a different state. Or if you live in a state that doesn't have taxes, like Florida or like Nevada. By the way, just so you guys know, don't set up your company in Nevada. There's no reason to set up in Nevada. If someone set you up in Nevada for a specific reason, we could talk about it. It's almost never as good as people say, and it's always more expensive, almost always more expensive than what people tell you, or than setting it up in your own state. What your state will tell you to do if they see that you've been setting up a company in another state, they come to you and they say, hey, you need to register your company here as well. So then all of a sudden they have a record of your company, it's registered, and now you're paying registration fees every year to both states. So it ends up just being a little bit more of a mess. Now, again, there's nuanced reasons to set things up in different states. So there are absolutely reasons to set up Wyoming companies, set up Delaware companies. And again, I don't really like Nevada, but there's reasons to set up these different companies and we can talk about them. But just so you know, that's kind of the rule of thumb, is set it up in the state that you live in.
Perfect. That works. Terry says, how much does it usually cost to maintain an LLC or trust yearly?
Okay, so Terry, and I believe this is Terry in the Caymans. Terry, it depends. Again, it just depends. It's anywhere. Most states, there's some states like Arizona where if you set something up, you'd never have to touch it again. You set it up once, you pay one filing fee, and you never have to pay another filing fee or do or file anything again. Idaho's that way. You have to file yearly reports, but you don't have to pay anything. Iowa's like that. Most places it's anywhere between $50 and I would say probably $200. And then you get into crazy states like California that make you pay $800 a year. Again, if you're in California, we can talk about some options there that might be a little bit cheaper long term. But it generally, I would say between $50 and $150 as that registration fee as far as LLCs go. Now, trusts are different. Trusts, you don't have to register. There are some states where they like you to register a trust, but you don't actually have to. They might even say, we want you to register the trust, please register the trust, but it doesn't, if you don't register the trust, it doesn't do anything bad at all. And they, they don't come after you, don't pay fees or whatever. So in a lot of states, depending on how you're set up, and again, trusts are a whole different animal. And I do a ton of work with trusts because you can do some really cool things with trusts. But trusts are different. You do not have to pay fees every year for those. Now, and again, for the few out there that it would make sense, and there's some really cool trading things that you can do as far as international trusts. Trading is a very specific, it's a very specific industry that has the ability to be a foreign industry in the US and not pay taxes. There's some really cool things you can do with foreign trusts that way where you're really lowering your taxes. If you're making a decent amount of money trading and you're paying, again, I don't want to get, if you're making a lot of money trading, that's something we can talk about. And then those types of trusts cost money to maintain every year because you have to have trustees and stuff like that. But for most people, you can set up protective trust, things that will you can file bankruptcy and your stuff's protected. There's some really cool things that way that you can do with trust. And most of those, they don't cost you anything. It's just you set it up and you're done. You do it one time, you don't have to pay anything else moving forward.
All right. So I'll take only 5 more minutes of your time, Kent. Here's a good question. Do you trade the stock market?
So I don't. So all those wonderful people out there who are investing, I'm currently, I'm going to call it investing in my law firm. So I'm trying to grow as much as I can. So that's where everything goes. But I'm very, I am very aware of the rules and everything. And you know what? I'm not going to lie. I have thought a lot about just saying, Tony, teach me. So,
Yeah.
that might happen in the near future.
Yeah, totally. Well, him and or I will be happy to do
Oh,
help you
thank you.
learn. But yeah, man, invest in the law firm. This interview will help you grow as well. That I can.
Well, thank you.
Yeah, man, my pleasure. But dude, this is definitely. I know it sounds weird to say this is exciting, but it's good to have someone that is both articulate, excited, and has a lot of experience doing this. How long have you been an attorney?
So I've been an attorney I'm in my 6th year of being an attorney. And I'm on the younger side. Law's so traditional, and it's just really fun to be kind of in a space that's not as traditional, you know, um, and to be working with things like that and finding people in that space. And I've been able to do that a lot. And a part of that's just been, I got out of law school at the right time,
Yeah,
you know,
yeah,
there's a little bit of a movement to kind of make things a little bit less traditional. So yeah.
killer, man. Well, again, folks, if you want to reach out to Mr. Kent Savage, do it with a 30-minute consultation phone call.
Yeah,
Why
totally.
not? He's not a hard pitch sales dude. I know this because him and I have been texting back and forth. And the thing is, it's worth a phone call. It's worth just getting some questions. You have to spend money to do anything in life. It's either money or time. So
Yeah.
if you want to do anything in life, it's going to cost you a little bit of money or a little bit of time. So figure out which one you want to do. And if I can say this for sure, my personal opinion, if you currently are trading full time and you have a job, you are blowing money by not having a really, really good setup like this and going through and getting everything structured and taken care of, because there are so many benefits of being able to flex both income streams.
Absolutely. Absolutely.
Yeah.
And just, you know what, Jeremy, if you don't mind, let me just throw out one just little example
Throw it.
of what I think some money that people are leaving on the table. So one of the things, and you've probably all have heard of this. It's the meal deduction. Okay, everybody's heard of the meal deduction. If you have a business meal, you can deduct it, right? Um, what I've found, so I work with tons of accountants. So I'm not an accountant, I'm an attorney. And I set up people so that they're in the right structure now and in the future. But obviously, this is very hand in hand with accountants. So I have accountants that I work with that I love, that are really good. The problem is accountants, they're really, really good at running numbers, but they only run the numbers that you give them. So a big thing to me, and like I told you, I'm really big on the education. I really want you to have the good education so that you can take advantage of things. So meal deduction. If you read the regs and if you actually you get into the specifics of the regulations, you will find that it gives examples of the types of things that you can deduct. So for example, I'm sorry, let me try this again. I'm getting a little flustered here. It gives examples of the types of meals you can deduct. And basically, if you read into it, if you have a meeting with another adult person, and you have to classify the person properly, but if you have a meeting with any other person and you discuss your business, or you have a discussion in any way, even it doesn't have to be 30 minutes. It could literally be you asking them about their business and them telling you about their industry or anything that has any effect on your business whatsoever. We can write that off, okay, as a meal deduction. So in other words, what I'm saying in a really convoluted way is anytime for the rest of your life that you have a meal with another person, I want you to make it a business meal.
That's right.
And same with travel. And same with mileage. There's crazy things that we can do. And even in the right cases, owning your automobiles through your business, there's things that we can do that people have heard of that, you get, even when you have a good accountant, the good accountant says to you, well, we'll take all these deductions. There's awesome deductions we can take, but you're not actually, they don't sit down with you and coach you on how to take those deductions. So that's one of the things I like to do. If you call me, whether or not you do something with me, I'll give you some of that info. That's just a big deal for me. I just want people, when you finally get to the point where you're making a little bit of money and you're not paying taxes on it because you're taking advantage of the tax code and doing things like that, it's amazing. So you want to have other people have that opportunity. So again, if we just call just to talk, I'll give you some of that info. It's a thrill for me to talk about that kind of stuff.
Killer, man. Okay. Final question, I promise. Everyone's booking phone calls right now. So quick final question. There is a interesting distinction though, between writing everything off and having no income and trying to buy a house or buy a property or do something.
Yes,
right?
absolutely.
So where's that line get drawn? Because I've run into that a few times where I'm like, I made no money. And I try to buy things and they're like, yeah, bro, you're broke.
Yes, that's a great question. So, and again, I'm going to give you the it depends answer. One of the things to do, and my wife's in the mortgage industry. She was loan officer for a long time. She's actually not working right now, but you have to find the right network of people that understand what you're doing. Okay, so part of that is finding, let's say you're going to buy a house, you need a loan officer that sees what you're doing. So I have a home. For the tax, I use tax returns to buy my home because I have a mortgage. And you better believe that I wrote off a ton on my taxes, right? Using these strategies.
I mean, why wouldn't you of all people?
Yeah, exactly. But part of that was I had to work with the right, and my wife was, again, she's a loan officer, but it's finding the right loan programs and things that will accept income into your business versus the income to yourself to qualify. And again, I don't have the perfect answer on how they do that because I know loan officers who do that really well, but you just have to find the right network and the right people that
That's
can.
so funny. I didn't even, dude, it sounds so obvious, but it's like, yeah, just get a really good loan officer who I can talk to and go, dude, because I've tried to explain that before. I'm like, listen, I make money. And they're like, not according to this, you don't. I'm like,
You're like, nope, you don't. It says so right here. Right. You just, again, there's different types of loan products and different things. And I will say, I've heard that since the start of COVID and the things that have been happening, I've heard that a lot of those programs have kind of slowed down, but that's probably a temporary lull. And I don't know all the details on that. But again, you find the right loan officer, you have the right people in the right team and the right connections, you can qualify for lots of things.
heck yeah. Killer, man. Well, again, folks, you don't have to have a Calendly website to use this. Go to, it'll be in the show description. It'll be everywhere you need to do, but that'll be the link. It's in the chat pane. And sorry, Kent, for blowing you up, man. You're going to be absolutely slammed for the next like.
I appreciate it. I really, like I said, I love talking to people about this.
Cool.
I love working with the type of people that are willing to take risks and do things like trade, because it's not easy, right? It's not easy when people start out to make that decision to do that. And honestly, I've always loved talking to people about it. I love talking to people about saving money, but I also love the industry and the people that are in it. So
Killer, man. Well, looking forward to a great, bright future together, helping people make money, save money, grow money, expand their mind, expand their wallet, expand the bank accounts, and, just do great things for great people.
Absolutely.
Appreciate being here. And if you want to stick around, man, it's entirely up to you. Tony's about to take the mic anyway, so I'm sure you got a lot of things to do, but your boy Tony's going to hop on and just wreck from here for the rest of the day. So just want to say thanks for being here in general.
Well, thank you guys. And yeah, heck yeah, I'll stay on for a little bit here.
Cool, man. All right, man.
Okay,
so, Tony,
thank you.
Yep, my pleasure. You're welcome. Yeah, team, great stuff. Thank you so much for listening and for watching. Appreciate you being here.